and welcome. You're watching Market Fatafat on ET Now with me, Snehisha, and with me as always is Ankita Saxena. And this is a show where we are going to be talking about all the big buzzers in today's trade, all the big winners, all the big losers on the back of some fundamental news as well as how these stocks are shaping up on the technical charts as well. But before we do that, Ankita, let's take a look at what the markets are doing. And finally, after 6 days of being in the red, we're seeing some respite coming in for the markets today.
Yes, absolutely, Snehi. But spoken too soon, maybe because of the intraday volatility that we have been witnessing. You'd never know when the tables turn. But yes, for now we have snapped this 6-day losing streak. In fact, Nifty has seen a good recovery. It has seen, in fact, in the day today, Nifty had slipped below the 24,800 psychological levels also. But before the dips got bought into, and of course we're seeing a recovery of good 174 points right now. Nifty Bank is outperforming the benchmark indices, has now recovered a good 438 points from the day's lows. In fact, all the banking names are doing pretty well. The private and the PSU sector banks, all of them are participating very well in this rally. Broader markets are also participating. In fact, in the last 4 to 5 sessions, they were seeing underperformance coming in from the broader markets. But today they are pretty good. In fact, they're tad better than the benchmarks as well. Especially the mid-cap names like Indian Hotels, Godrej Properties, Cummins, Concor, there's Bharat Forge that are doing pretty well. They're trading with gains of over 2%. Sectorally, Nifty Metals is losing its sheen. As top sectoral loser, and IT is also facing a bit of a pressure. And amongst the individual buzzers, Trent and Skipper are firing on all cylinders. But we'll tell you the reasons why these stocks are in focus today and why they're buzzing away in trade. So let's get started with the show then.
Absolutely. And looking good for the markets right now. Let's keep it going with all the stocks. In fact, let's kickstart. And from the technicals today, on the technicals, we have Osho Krishan joining us, Senior Analyst, Technical and Derivative Research at Angel One. And from our research team today, we have Ria, who's going to be joining us. Welcome both of you on board. Let me get started with the first stock. And in fact, it's a couple of stocks that are in focus today on the back of a brokerage note coming in. And that is REC and PFC. Now, both of these power financiers are doing pretty well for themselves in today's trade. REC up 4.5%, PFC up almost 6% as we speak. And this is on the back of a brokerage note coming in by Motilal Oswal Financial Services. MOSL has initiated a buy rating for both of these stocks. And for PFC, they've initiated a buy rating with a target price of 560 rupees. And for REC, they've initiated a buy rating with a target price of 630 rupees per share. Here's their rationale and here's what they have to say. PFC and REC are fueling the nation's energy boom, and there's an investment opportunity of 42 lakh crore rupees and more. When it comes to this entire sector, India is projected to add roughly 250 gigawatts of new power generation capacity, and they also believe that we are now in a phase of power upcycle. For PFC and REC specifically, they stand to benefit from the power sector's capex revival, and the brokerage also does not see risks of incremental additions to the stress pool, at least for the next 2 years. So very positive, very bullish note coming in by initiations for both REC and PFC, and that's the reason why both of these stocks are holding up pretty smartly.
All right, at REC and PFC, but let's move on to the beleaguered RINL that continues to reel under financial pressures. In fact, centers have stepped up the revival plan for the company. And sources, in fact, are telling ET Now that the center is working on measures to inject some liquidity into the company. Monetization of the non-core assets may also be on the agenda. So let's go across to my colleague Prakash Pedashi, who's joining in with the details of that story.
Yes, Rashtriya Ispat Nigam Limited, that is RINL, is in deep financial trouble, and various steps are being taken by the government for the revival of the company. Steel Ministry has confirmed that various steps are being taken in consultation with the Finance Ministry, and one of them is liquidity infusion measures in the company. Along with that, the monetization of non-core assets of RINL is also on the agenda. It is important to note that the company is running at minimum capacity at continuous losses, and Steel Ministry is also saying that the RINL is at risk of being classified as non-performing assets by banks. If you look at the financial status of the company, the overall dues of RINL have gone above rupees 35,000 crore. In addition to that, the company's total borrowings stood at rupees 17,800 crore as of July 2024. Along with that, the operating loss of the company stood at rupees 1,748 crore during first quarter of the current financial year. Therefore, various steps are being taken. The Steel Ministry, in the consultation with the Finance Ministry, working on various measures for the revival of the company, and it's expected that the government will announce series of measures very soon.
All right, moving on to the top buzzers in trade today. Trent is doing pretty well for itself. In fact, it was up 7%, and right now also it is trading with gains of 7.2% actually. And in fact, the stock hit its all-time high today. It is on the back of a note by Morgan Stanley, which is very positive, and they're maintaining an overweight rating on Trent with a price target of 8,032 rupees per share. Now, this target implies a further upside of potential 8% from the stock's last closing levels. The foray into the mass price beauty segment with Zudio Beauty is auguring very well for Trent. In fact, the beauty BPC sales have already, contribution was already quite material in Westside and Zudio stores, but the beauty segment is also likely to really augur well for the company. The BPC business has built scale over time as customers have become more indulgent and impulsive, and the emerging category salience has also increased to 20% of the standalone revenue versus the 10% that it was contributing earlier on. So, positive note coming in from Morgan Stanley. In fact, the Kotak Institutional Equities have also highlighted that the Trent has launched a lab-grown diamond jewelry brand called POM in Westside stores, and according to Kotak, POM has the potential to pioneer broad-based adoption of the LGD jewelry in India. Good positive notes coming in for Trent. On the back of that, the stock is up and away in trade.
Alright, so that's the reason why Trent is in focus today, but we also caught up with Jignanshu Gore, the Director and Senior Research Analyst at Sanford C. Bernstein, India. He sees Trent's foray into the lab-grown diamonds and the beauty vertical as big positives for the company. Let's go across and hear out his rationale on this development.
So the Zudio Beauty line is a way of creating an independent business, and I think there is a potential for that business to grow and add to the top line, and hence add to the target price as well. I am also I'm also very excited about the lab-grown diamond business, which Westside has announced under the brand name of POM. It is an unknown space in India, largely so far, but it fits very nicely with the whole consumer theme in India, which is about aspirational buying from consumers, but not every consumer can really afford a real diamond. So I think both these avenues that they have are net positive for the company.
Well, okay, on that note, let's move on then. And Osho, you've picked out Zomato on the charts. Now, this stock has been in focus ever since Swiggy has announced its IPO. If I take a look at the stock move, the stock is doing pretty well today, and in the last 6 months, roughly 45% return. Year to date, the stock has more than doubled. So, do you see this momentum continuing for the stock going ahead, or do you think it's time for some slowdown on the charts now?
Firstly, very good afternoon to both of you and all the panelists. See, looking at the technical perspective of Zomato, then this counter have been outperforming in the very recent period also, but overall the counter is looking very promising on the technical chart for short term as well as medium term duration. Recently, the correction from the zone of approximately 298-300 odd zone towards the breakout zone of 265 has been can be seen as a very productive way on the technical structure, and one can try to accumulate this counter again for a higher target of 300 in the short term. But overall, the chart structure is very bullish. It is in the cycle of higher highs, higher lows. The time we witness a strong, decisive breakout above the zone of 300, then again we can see another 20 to 30 points of rally in this counter. So even for short term, this counter looks very positive at current levels, and even for medium term perspective also. So one can definitely try to accumulate it for the targets of nearly 300 in the short run.
All right, a positive view coming in on Zomato, but coming to you, Ria, you picked out the power sector for us. A brokerage note by Nomura. Tell us on the power sector, what is the note saying, and what are the counters that they have picked out?
Yes, well, we have two major power stocks in focus today after Nomura has come out with a report on the power sector. Now, on Tata Power, they have initiated a buy with a target price of rupees 560, and they have said that they expect Tata Power to deliver a robust 16% EBITDA CAGR over FY24 to 27, and they believe that this growth is going to be driven by a 2x increase in the renewable energy capacity. They are also seeing robust delivery on the rupees 15,700 crore solar EPC order book and a jump jump in the Odisha profitability as well. Even on JSW Energy, they have initiated a buy with a target price of rupees 885, saying that they expect JSW Energy to deliver a solid 38% EBITDA CAGR over FY24 to 27. They're also seeing over a two times increase in the operational capacity and healthy margins on the renewable energy generation projects as well. And on the back of this positive note, both these stocks are reacting positively. Tata Power is up more than 3% and JSW Energy is also up almost 5% today.
So that's the reason why the power counters are in focus on the back of that brokerage note coming in. Let's move on. Osho, on the charts, you've picked out CG Power and Industrial Solutions. In the last 6 months itself, more than 50% return coming in for this stock. What's your view on the charts going ahead for this one, and do you think this momentum could sustain for the stock going ahead?
See, overall, there has been a very strong consolidation in CG Power on the technical front on weekly and monthly chart both. And I'm expecting that from here onwards, the time we witness 780 to get breached, there can be a decisive upsurge of nearly 120 to 150 odd points. So approximately 900 to 950 would be the target that one can definitely expect from medium-term perspective. Overall, the chart structure is very positive. It is maintaining the positive stature and lying on the higher zone of the band. So I'm expecting the time we witness a breakout, there can be a decisive upsurge and one can definitely try to gauge the momentum that will be coming in this counter. So it will be a buy for short-term perspective, and for medium-term, the target comes around 900 followed by 950.
All right, that is CG Power on the charts. But before we get you more buzzers, let's take a short break and we'll come after a while.
Hi there, welcome back. Thanks so much for still staying tuned to Market Fatafat. You're watching ET now. Let's keep it going with all the big buzzers in today's trade, and the stock I wish to highlight now is BEL or Bharat Electronics. Let's talk about why BEL stocks are in focus today. It's because the Navratna Defence PSU has bagged orders worth more than 500 crore rupees since it last announced about its previous orders on September 11th. The new contracts include EMI, which is the electromagnetic interference shelters, annual maintenance contracts for integrated air command and control systems, nodes, upgrades and spares for gun systems as well, radar spares and communication systems. BEL's order books for the current financial year has now surged to 7,689 crore rupees thanks to these new contracts, and the company is aiming for a strong order inflow of 25,000 crores in FY25. As of its 11th September update, BEL had secured 7,075 crore worth of orders, including 1,155 crores from its recent wins. So the order win rally in fact continues for BEL, and positive news flow, stock up almost 4%.
All right, moving on to the pharma space, and a couple of names that Jefferies has picked up in the pharma space. In fact, it has given an update on these couple of pharma names. As you can see, the pharma count is in focus today. Cipla and Lupin both trading with gains of almost 1.5%. They feel that Cipla continues to gain market share in the albuterol and the Lanstroid segment. Also, Lupin's market share loss has accelerated in G-Suprep. Sun Pharma, they feel, has gained market share in G-Suprep and G-Cipridox. Growth remains strong in both the Illumia and the Sequoia segments for Sun Pharma. Zydus has also gained 200 basis points in the Begron segment, and Dr. Reddy's market share loss in the G-Vespa has but reversed in G-Ciprodox. So these are a couple of updates that they are coming up with. On the back of that, Cipla and Lupin, as you can see, are the main focuses for Jefferies' note, and on the back of that, both the counters are trading with gains of 1.5% right now.
Okay, so the pharma space is in focus on the back of this brokerage note coming in. But Osho, you've picked out the HAL for us on the charts. If I pull up the chart, last 1 month negative returns, and even on a year-to-date basis, in fact, the stock has given more than 50% returns. So do you think after this a slight blip of correction that we've seen for the stock, now it's all looking good going ahead on the charts?
See, overall, there are two major observations with HAL, the chart structure of HAL. Firstly, as we have seen, there has been a decisive correction from the zone of 5,600 towards the zone of nearly 44,000, 4,100 odd levels. But previously, if we will be seeing this on a broader time frame, then approximately from the same levels, approximately 4,000 4,100 has provided very strong cushion to this counter. Even the volatility that we have seen in the month of June, the lows were approximately around the same 4,000 odd level, which is now coinciding with the 200-day SMA on the daily time frame. So I expect that these levels should be auguring very well for the buyers. This level can provide very strong cushion to the downfall, and from here onwards we can see a decent up move in this counter. On the higher end, 4,800 is the positional target that one can expect with HL. The time we see 4,800 to get reached, then there can be a strong trend reversal and buying traction can be seen in this counter for higher targets. So from here onwards, one can definitely try to accumulate this counter for a decent upside move.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.